Let's talk. From the 15th of March 2022 until today, Alibaba is up 46%. What happened? It does seem like as time goes by, we might have visited the bottom for many of these said Chinese stocks. So I guess within the last 3 months, investors are no longer afraid of the VIE structure because suddenly they changed it overnight. Or maybe because China is going to become less authoritarian and maybe even consider becoming a democracy. Or maybe China suddenly figured a way to solve their housing, demographic, and even their economy problem. You know what you shouldn't be afraid of? The like button, of course. So remember to help me like that smash button. Oh, and one more thing. Not sponsored by the way, but I know many of you out there probably have not maxed out all the available sign-up rewards. Currently, stockbrokers like Tiger, Moomoo, and even Weibo have extremely aggressive sign-up campaigns that gives you essentially risk-free return. Where can you get something like that? Moomoo and Tiger Brokers is giving out cash coupons and even free shares, and if you're lucky, you can get a free Tesla stock. While Weibo on the other hand is giving out $100 worth of Apple shares. And you shouldn't allow all these 100% ROI deals get away. I'll leave the link to all these brokerages in the description box down below. Let's be clear, none of those said factors are actually resolved. But everything mentioned previously were quote-unquote bear arguments for not investing in China. So what exactly happened? Basically, sentiments changed. In a bull market, you can find 101 reasons to buy a particular stock. It has a huge total addressable market. The company has superior products. It's only at the start of the S-curve. It's going to disrupt this and disrupt that. In a bear market, however, you can also find 1,001 reasons to sell the stock. Its margins are compressing. Its competition is going to kill them. It's going to get delisted. It's a VIE structure. And why not just throw in the political system as well, just for the lols? So you see, it's easy to construct arguments and cherry-pick data. Because at the end of the day, let's not forget that we are all intelligent beings. Now, please don't misunderstand. We are still a long way up from here. From Alibaba's peak in October 2020 to hopefully its bottom in March of 2022, it was down by more than 70%. So this actually means that Alibaba has to recover minimally 233% before it will revisit its all-time highs again. So 46% is just a quarter of that journey. But I think it's helpful to actually understand what are the core tenets that is driving this change in sentiments over the last 3 months. Let's not forget, stock prices are just an aggregation of demand and supply in an exchange. So in that same period, the S&P 500 actually collapsed by slightly over 10%. So where are investors gaining the confidence to essentially throw money into China when it is probably deemed as an inferior place to invest your money in? Now, just a quick crash course for those of you who don't pride yourself in having a really good memory. So the 15th of March is allegedly the bottom for Alibaba, where it visited $73. Just one day before, on the 14th of March, JP Morgan issued a statement of China being quote-unquote uninvestable. And just before that weekend, StashAway sold their entire Chinese position due to quote-unquote sanction risk. So I've documented the entire journey on how things transpired in a few videos. Feel free to check them out. So right after that fateful day of Alibaba trading low 70s, Liu He, who is Vice Premier of the PRC, issued a statement signaling further support for the tech sector, which caused a massive bounce the following day. And it was at least a 20% jump. A $200 billion company trading like penny stocks. Incredible. Thereafter, Alibaba continued trading in a downtrend, still locked into that negative momentum as markets came to realize that, hey, whatever Liu He said was just a continuous iteration of what others have said previously, and there were no concrete steps behind it. So the turning point really only came after 25th of May, where Alibaba's chart pattern started forming higher highs and higher lows. So what happened, you might ask? Glad that you have asked. Okay, I'm enjoying this monologue a little too much. But anyway, I don't think it was any specific one action or policy measure that instilled such confidence back into investors again. Simply put, it was a culmination of statements, policy actions, commitments, etc. that got us back on track. So I'm just going to name a few to provide some context on what the administration is currently thinking and how they're intending to implement certain strategies and how investors are reacting accordingly. So it wouldn't be all-encompassing, but I will try my best. So on April 26, Chairman Xi actually calls for an all-out infrastructure push to push the economy. So this strategy was unlikely to be as effective given the current challenge of the COVID lockdowns then. So it was also an old playbook of stimulus via public spending, and given the current economic climate, people were skeptical about how they were able to carry it out. So on 25th of May, Premier Li Keqiang said in an emergency meeting that the Chinese economy faces grim challenges and called on local governments to essentially try to stabilize the economy. So on May 27th, the CSRC and the Hong Kong Securities and Futures Commission actually announced in a joint statement that ETFs will be included in the quote-unquote Stock Connect program. So this will allow investors to trade eligible ETFs listed on both the Chinese and also the Hong Kong exchange using local securities firm or brokerages. So it is definitely seen as a very bullish signal by allowing mainland investors access to Hong Kong listed securities. More investors means more money and more volume. So on May 31st, the State Council released a set of 33 measures in a document titled Policy Measures Package to Stabilize the Economy, covering a wide range of mechanisms aimed at supporting businesses impacted by the pandemic. As the name suggests, many of said measures are aimed to only stabilize and not stimulate the economy. But at least we are getting somewhere. And within the same period, we have speculations of an IPO from multiple sources for multiple times, ranging from regulators approving Ant's IPO to the commission receiving their application, etc. I'm not going to cover them because they are all deemed to be fake news as of now. I will only believe it if it comes straight from the horse's mouth and not people familiar with the matter. Next, the 618 event came to a closure because it was the 18th of June. JD, who is one of Alibaba's fiercest competitor, actually posted the slowest growth ever in the 618 event, with only 10.3% growth, sharply down from the 27.7% in 2021. So the quote-unquote good news is that based on estimates, Alibaba's Tmall, JD and Pinduoduo together achieved a 618 sales of around 55 to 56 billion USD, which is up 26.5%. So if JD reported only 10.3%, but the industry average is 26%, so it either means that both Alibaba and Pinduoduo both outperformed JD, or maybe one company outperformed significantly. Keeping our fingers crossed here, of course. Next, on the 22nd of June, Chairman Xi pledged to meet economic targets of 5.5% for the year, even as the government's zero-tolerance approach to the pandemic and a weak housing market puts the growth goal further out of reach. So many economists have been extremely skeptical about this goal and even downgraded their expectations to 4.1%. 5.5 versus 4.1. So I guess as long as senior Chinese officials keeps to the same story and constantly reiterate what they want to achieve without providing concrete guidance and evidence, the market will just buy it sooner or later. Especially so if it comes out straight from Chairman Xi. On top of that, Chairman Xi also commented that China's payments and fintech sectors to play a bigger role in boosting economy, following up on its earlier pledge to support the healthier development of the online services sector. So subsequently, on the 23rd of June, Hong Kong regulators are currently in talks with Beijing's Ministry of Finance about granting it access to working papers of mainland Chinese companies. Could this be the first of the many steps in how Chinese companies are allowed to comply under HEFCA? Who knows? But at least, there are definitely movements behind the scenes based on the different reportings. Long story short, is it still a good time to buy Alibaba now? If you have determined that you want to be an Alibaba shareholder, I think any time is a good time to buy, as long as the valuations are not extremely demanding. Even after a 46% bounce, I don't think they're extremely demanding. What do you think? Leave in the comment section down below. Oh, and I just wanted to address a point I came across recently. I saw somewhere along the lines stating that as long as the US keeps raising their interest rates and tightening, the whole world will follow suit. That's true for smaller economies, but as the saying goes, don't fight the Fed. The same can be said for China. Don't fight the Chinese government. If the Chinese government have the resolve to resuscitate the economy and wishes to do quantitative easing or even lower rates, even when every other advanced economy out there is doing the opposite, they will bite the bullet and they will do it because it's China. I'm just saying if they really want to do it, but I don't know whether they will. It's always a probability game. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!